Hello and welcome. Today's date comes in that of the 8th of November 2019. My name is Derek. This is the Money Charts channel. All bets, trades of the like within each his own risk and their own reward. Taking a look at silver, and the lines representing Fibonacci from these lows and these highs. And the 1613 represents 61.8% down, 1740, 38.2. And then the equivalent Fibonacci levels, each one higher. Of course, they're short-term levels, but they haven't been tested since it broke down from there 4 days ago, start of the week, as it came up to another test of this 1876. So a very, very good move from the May 28th lows, where price action never really did anything below the 18 average of lows. In fact, the only anything was on July 8th and 9th. So since then, well, it supported it pretty much perfectly at the lows at the start of the month in August. And then between the closes not shown and the highs, but really the closes is where it's supported on August the 13th, and then again from August the 19th through that of the 22nd. And then that breakout was to where the high is. So a phenomenal run. So as far as resuming that opportunity, get that bull market resuming, it hasn't done that. And the two opportunities in which it got above the 18 average of highs, first, the lower high rally to the key Fibonacci level at around the 1876 mark. And even though it says looks like 1909, it's actually 1876, as we can see in here. And then after that, the next one was here on October the 25th. After all of this sideways consolidating and supporting the 1740 magnificently, it broke out above it, but ultimately here we can see that on Tuesday's session, broke down below from this level in here, did find what only worked out to be that of shorter term support here at the 1740 marks before it did it. 2 mornings ago, Wednesday morning, it found support there. Managed to get up to the 18 average band on, well, the 3-hour term, at least in this one. And then, of course, breaking down from there. So we can see in here, didn't look like there was really any support there. It was a lot less than, of course, these 2 particular previous times, even 3 for that matter, because it had this failed breakdown. But the failed breakdown really failed in getting that fast move higher. Now, looking at Fibonacci analysis, of course, we got 1613, but we got a low in here of 1740. So let's put in my Fibonacci calculator, and we'll put that number in. And what we're doing is we're going to take high divided by low. What's the high? Well, the high is this 1876 handle. So let's put in 1876, which gave us a down target of 1661. Yeah, well, you know what? It might hit. I thought, when I calculated this earlier, I actually calculated down here. I didn't think it made sense. But actually, when I was going to go follow through, I was expecting a different number, because I thought when I quickly did my analysis an hour or 2 ago, and I got the exact number of this low, which was sick. Anyway, I'm not going to redo this video. Make sure this number is right. Yeah, 1876 and 1740. Yeah, well, the down target there said that this move should have went down. It was a low of 1689. That's what I got the first time I did it, which is really odd. But then I did it again from this low to this high. It came out to like 1608. Let's see if it does it again. So this was 1689 for the low. And then this high in here at 1833. 1606, yeah, so that one. This target here should stay, but anyway, as it goes, based on this is the more Fibonacci levels I like to use, which is the normal retracement on the exponential level. And of course, this 1740 level looks like it's giving in and should be heading down towards the 1613 handle. Again, on the short term, it was one of those spots where it came down, found support right in here. And within this one in here, couldn't get above this established resistance. And then when it broke down below the support yesterday at 11 o'clock, decent sized move. And it has just continued, of course, within it. The downtrend has not stopped. So as I've stated, whenever you have a move and you break a key level, look for those areas of support and resistance. Well, haven't been there. If there's going to be any rally, we definitely need to look at 1740 as resistance, but that hasn't been the case yet. It's got to get above the 18 highs. But even on the short term, or shorter than this even, we can see that we established support here at 11 hours on this stamp. We supported it here as well, doing so at around 1692, which is where we are right now. So are we going to be resisting this level? Maybe. But when you start to see weakness from this 18 on the low starting to go down lower, then most likely there's a good chance we even continue to have a leg lower. And of course, a move to around 16 even is what I would think on the short term could be the case. Switching things to the more longer term time frame. And a situation like this, I realize where it needs to hold and stay above on this one. Is that 16 level, as the Fibonacci hairlines don't show. It had a very phenomenal move above the 18 average of highs. So whenever I come on here, or if I'm looking for, I need to see the lows hold as the area. Well, the problem is, if this is where the 18 average of lows is, and this is where the must hold area is, I really don't think this is a time frame for me to determine the play, other than the fact that I expect there's no normal chance of a single pierce below. Therefore, what I would do is I would look at another time frame, like the monthly chart, and this would be the one where I would need to see where it holds. For within this, and I don't like the volume as it is, let me just hide it. Yeah, looks a bit better now. Put a line here just because I like to put lines in, and the line in down here. This really has been the primary range since it, and you can even really, well, you can say since it broke down in here, but really from the start of I should put the years back in, but looks like 2013, 2014. Yeah, 2014. So well over half a decade, or noticeably over half a decade, in this sideways consolidation. And it was one move from the 2000 lows that got us here with one pierce below. So two moves, however you want to look at it, but either move, key high, key low, all that stuff. Well, now this is a key low. But there hasn't been any phenomenal action since then. It's just been the sideways action. And amongst the sideways action, there was this opportunity here for a market to break higher. It didn't do so immediately. It didn't do so with any correctionary phase. So therefore, we can see the breakdown signals coming in here. But it's supported this twice hit, now third hit level of support. And even after the third hit support, it even teased or scared the fact that it was going to do on a fourth hit, next hit, it was going to do this move. But that didn't happen. So alternately, it had a second attempt since these key lows and reverting this trend. And so far, it hasn't. It's got an 18 rising average, but whether it's rising or declining within this range is all pointless now. It's all part of this sideways action. Short term, again, that total 16 low number, if we bounce from here, that means we would come back down towards here and move these things again. We have the 18 average of lows right now with the month relatively new, 1543. And then next month it might rise up to, well, it would rise if it stays above it, but it went from 1527, so maybe 15 2/3, 1560. And maybe that's what it does do, is it pierces below 16 and does hit that level. But until it breaks resistance or support on either side, well, there's not much really more to state other than it's in a sideways range, and on a break of either resistance or support, it's going to be relatively decent, most likely. There we can see it again here. This is on the quarterly chart. There's resistance, there's support. Now, within that 2008 sell-off, it was even a smaller move below the 18 average of lows, most certainly holding and staying within the band. And as it had this top, it had one resistance on here, It had a second. And then it had the same sort of sideways range. It attempted to get above in here, and it successfully corrected. And then it had a failed breakout in here. Because when you look at it as it played back then, you could have been covering silver back in here. And you would have been saying, okay, you had been talking maybe all this about fiat currency, monetary stuff, inflation, and all this type of things. And you would have said, yeah, we had that move in 1979, 1980, but let's face it, it's been like 15, 17 years here of this bear market. You'd be sitting here in 1998. It's been almost 2 decades. It's just so due. It has to happen now. And what happened was it took a lot longer because that was a failed breakout. Oftentimes from failed moves comes fast moves in the opposite direction. Not this time. Thus, it was a very long, successful correction. This one in here was very successful. Exitation of the 18. And then the break of this one, also successful as well, given, of course, what has happened. So just like you have a down move, you have sideways attempts, all these failed rallied attempts within the sideways. To me, that's what a lot of this is in the comparison to in here, that we have exitation in here. It had a phenomenal move. I believe same thing in here, the exitation of leaving such, meaning price action getting into the 20s. I don't think the 20s will be seen for that long. And we'll finish it off with a quick update on gold and the ratio, which for gold's sake is getting above the 18 average of highs, trying to do just that, has done that. It's just in the early stages of the exitation from the sideways consolidation it's had since the 2013 lows on the quarterly chart. On the monthly chart, we can see it's had several months now. This is period number 4, or 3 cents, the time it hit the high above the 1522. It still hasn't retraced too much, but it does look as if in here that if it does, I mean, 1321, you could say even before the fact, if it breaks out above here when you're talking about this, don't be surprised if it goes up to 1522, then comes back down to 1321. Now, that's just how it goes. We'll see if it does. Now, if it doesn't go to 1321, we'll have some phenomenal moves between 1670 and the previous high at 19. Still, we don't know what that's going to be next. Is it going to have any price resistance in here, or a lack, or only that of a lack in time resistance? Well, time will only tell. But as we move on to take a look at things, say just quickly on other time frames, weekly time frame, a lot of this consolidation, these lower highs, finally having a move below the 18 average of lows since it's had this break above. On the daily term time frame, we've had an attempt to get above the 18 highs on here, didn't do it. This was most certainly for a couple days holding above it, and then we can see, okay, after this red down day, we hang in there with the lows and then the exit of it now. So now back in with the support, I'd be looking at like 1484 up to like the 14. I guess we got this line. I don't think we really need it in here anymore, but this general area here of like high 1400s, 1490 area would be a key level of support, or resistance, as it used to be support. And on the single hour term, and I should get the volume back in again now. Although I don't think I need it on the ratio, but you can really see the whole time differentials on this. That's something you don't get on like crypto charts, but that's what it looks like here. Let's take a look at the gold to silver ratio. And because we have gold or silver going down and going down more than gold, this is going higher. And we've now seen this higher low to this higher low to this. Technically, this is a higher high, but sort of a very good matching one. But now it's matching this level again and piercing above it. So making a higher high, you'd be expecting to be within this next congestion area of around 88 to about 88 to 89 and change. Or even really 88 to 80 to 89. And taking a look at this, I don't know if I have a lot of lines on here, but it's all fine. So we got these short-term lines in here doing its thing. We got all these long-term lines because the ratio is very, very high. I wouldn't be surprised either way if it goes. I do think long-term that the destination of this is not only going to retest the 2011 lows of 32, and not only retest the historic lows of 16, but get into single digits. Now, whether we get how much above 100 if it does it as a possibility, I don't know. It could. I'm not going to try to make any prediction right now other than just that. It could. And what I stated before, in time, decent amount of time, that's a bold prediction to think that this will go well below 10 to 1. That's where I stand. We'll see what happens. Anyway, thank you for tuning in. Have yourself a great day. Bye-bye.